We back, family. We are back. They can't hold us down. They can't hold us down. They can try to shut us down, but they can't hold us down. But we are back live, family. We are back live. Super excited to be back with you guys. I have no idea what happened. I think I was providing too much heat, too much value, and they realized I was going to change too many lives with this information. So they're like, yo, let's cut them off. But we're back, family. You know, I'm not gonna waste too much time neither. All right, I'm definitely gonna go ahead and get straight into the charts. Right, let's see. You need to leave those Apple products alone. I'm telling you, Jarek, you're 100% right, and that's exactly why tomorrow I'm gonna start looking at new computers, completely new setup. I'm gonna go Windows. I'm gonna get myself a gaming computer, so we don't gotta deal with these issues no more. All right, because this is definitely frustrating as hell. Right, but you're right. I love Apple so much. Everything that I got is Apple. I'm talking about every single product that I got. I got 2 Apple iPhones, me personally. I got an iPad, Apple Mini, 2 Apple MacBooks. But with this type of streaming that I want to do with you guys, I'm going to have to really upgrade my entire setup and just go ahead and get myself a nice fire-ass gaming computer and all that good stuff. So definitely gonna be working on it tomorrow. Like I said, I'm gonna be going ahead and seeing what I could get, seeing if there's a way for me to actually build an entire setup. If I want to go Windows and I want to go gaming computer, I want to be able to build my own thing, right? So I'm gonna start to look into the pricing, see what I can get, see what I can come up with, and yeah, you know, hopefully I can get myself situated so that we don't even have this issue no more, family. But go ahead and drop some threes in the chat if you guys can hear me. Right, drop some threes in the chat, guys, if you guys can hear me loud and clear. I want to make sure that we are all good to go. Because like I said, I'm going straight back into the charts, or back into what I was saying, but then we're going to get right into the chart work. Let's see, family. Let's see. There we go. There we go. You heated the CPU with too much sauce. I'm telling you, Rodney, they ain't want us to win. But I'm back because they ain't going to stop me. Shout out to my guy, Sam. I see you. What's going on, Sam? Good to see you in the chats. I know some specs for your PC. I'll DM. Yeah, send me all the specs that you got. The boy Skaggs already did send me. Yeah, the boy Skaggs been sending me a few of the specs as well. Because I'm definitely going to have to upgrade immediately. But we back, family. We back live. Like I said, super excited to be live with you guys once again. And, yeah, we're going to get right into it. No more BS. And let's go straight into the charts, guys, before anything else happens. Because I do want to give you guys an outlook of what I believe we could really expect the markets to do over the next couple days. Right? Because keep in mind, guys, we do have CPI data literally coming up. Right, literally coming up at the end of the week for the U.S. over here. CPI measures inflation, and inflation is, like I said at the beginning, really one of the most talked about things right now that's really causing a lot of the fear, uncertainty, and doubt in the markets, guys, is inflation. And we will figure out how bad or how good inflation truly is over here in the U.S. on Friday, and that's going to be a big one, right? That's going to really dictate a lot, guys, because if inflation is still high, then I believe that's going to lead to a lot more negative factors for the economy as a whole. And like I was mentioning before we got really interrupted, right? Before I got really interrupted by my computer, you know, we were talking about just really understanding economics, or not even just economics, but really understanding how, you know, the difference between the currency and the equity markets, and how we really understand which one is going to benefit and which one is going to go, you know, the opposite direction, guys, because that's very, very important. Again, like I said, guys, that's something that I really struggle with in the beginning. You know, every time I would look at a calendar, I'll think that positive data will be more so positive for the actual currency. But in reality, it's usually the opposite, right? If we get positive data that comes out, right, then typically we're actually going to see a decline in the currency, because now money is flowing from the currency over into the equity markets as well, right? Big shout out to LT in the building. I see you going ahead joining the wealthy fam. I appreciate you. Welcome to the familia. Make sure to send me a message on Instagram so I can go ahead and get you added to the chat. There was also somebody else that also joined the family, and I just completely cannot remember who they were, right? So whoever actually joined the family as well by joining by clicking on one of the memberships, you know, definitely send me a message so I can get you added into this private chat that I have created for every single one of you guys that actually have a membership right here on YouTube family. If you guys noticed, if you're actually in the correct country, you know, you can literally click on the join button right next to the subscribe button. I have different memberships there, you know, and you'll be able to actually get added into a private community with myself and a bunch of other traders that are in there as well. And we really just go in there, just provide value. You know, that's really where you can go ahead and just ask all the questions that you have. Throw some charts in there. I'll be throwing my charts in there as well. And we just really just collaborate and just get better together. But yeah, send me right on Instagram. All right, send me a message right on Instagram. I'll go ahead and get you added in there out. And again, I forgot who it was as well. I think it was a lady that actually joined as well. But I'll get it. I'll figure it out who it was. Right. But definitely welcome to the family, guys. We also did have a new subscriber, DJ VIP, as well. I'm not sure if you're still on this call. All right, but welcome to the family. I appreciate you for being a part of the familia. Definitely means a lot. And I look forward to providing value to every single one of you guys. But again, this is going to be very big, guys. This week is going to be a very, very interesting week for sure that we have to be aware of. Okay, now I do want to go ahead and start off by taking a look at AUD/USD. You know, we had my guy Bert. Shout out to Bert, a big supporter of the channel. You know, actually was one of the first people that actually supported by dropping a super chat, which means a lot. So because of that, you definitely do go ahead, right, and get access to anything, right? Any type of pairs that you want to analyze, I will definitely analyze them because you supported the chat, you supported the channel. I'm gonna support you as well, right? So with interest rates that actually came out, guys, for the Australian dollar, right, we have to really go ahead and just take a look at what that can really do for the actual currency, compared or measured against the actual currency that it's going to be trading against, right? Because I know my guy Bert said AUD/USD, so this is going to be very interesting to see what actually happens here. What I think can actually happen, Bert, right? What I think can actually happen for the Australian dollar, right? Because obviously we understand, especially if we want to do interest rate differentials, the US clearly has a much higher interest rate than the Australian dollar. But why does that even matter, right? Because I'm all about education, right? So why does it matter in terms of interest rate? Well, the higher the interest rate, the more likely people are to actually invest into that specific currency, because now they'll be able to get more for their actual money, right? Because yeah, when interest rates goes up, the cost of borrowing goes up as well. It costs more to borrow money, but you're also getting more money back in terms of a return, right? Because the U.S. interest rate now is, I believe, what, 1.5%, 2%, something like that. So you'll be making 1.5% to 2% on your money, compared to the Australian dollar, where they're actually only doing 0.85%, right? So in terms of interest rate differential, yeah, the USD is a little bit more attractive in terms of long-term investments for foreign investors and things like that. So that's just pretty much the general consensus on why that works. But what I think can happen here for the Australian dollar is I'm definitely going to be expecting this thing to possibly continue going lower. But we're pretty much trapped inside of this range. It is something I'm also going to talk to you guys about as well, because a lot of these currency pairs that we're trading right now, guys, especially a lot of the USD pairs, for the most part, they are trading in a range, all of them, right? So I do think that there is a potential for us to eventually go ahead and roll over to the downside. So what we can look at is either a very simple break to the downside or retest, and then a possible continuation, right? Or what I think is actually going to happen, all right? And I could be wrong here, right? But what I think can actually happen is I think there's actually a chance for us to go higher, go ahead and clear all this clean traffic, right? Because if you look at price all the way to the left, right, this last massive push down that we've seen, right, this actually left behind a lot of clean traffic, right? A lot of imbalances in the market, right? So I believe there's a chance for us to actually go ahead and come and clear a lot of these imbalances before we actually turn around to the downside. Right now, I don't know, for some reason I'm leaning toward that possibility. Okay, but like I said, if price just ends up breaking this low, then we're probably gonna really go ahead and continue lower. If it doesn't end up breaking this low, or even if it does break this low and for whatever reason comes back above this range, then we're probably going to see price come all the way up to around the 1.0735 level. And then from there is where we really want to go ahead and start looking for some shorting opportunities for AUD/USD, right? So we're either going to be shorting from 0.735, or we'll be able to short on a break and retest of 0.715, right? So around those areas, Bert, is where I would be looking to actually short AUD/USD, right? But let's go ahead and take a look at a few other pairs, guys, and see what we ultimately got going on for this week. Now, again, like I said, we really have been very, very range bound. I mean, look at gold, really hasn't done much, right? We've been going sideways, guys, a lot, like literally just going sideways, right? Not really doing too much. Okay, even EURUSD, right? EURUSD, I had some crazy entries on, you know, and I still got an entry on EURUSD for the downside. But look, we haven't done much, right? We just been going sideways, right? AUD/USD, right? Look at this. Oh yeah, we just looked at that one, right? We already know that one's going sideways. The only one that really isn't is USD/JPY, which for the most part is still booming, right? And that is just going to continue happening. UJ is just going to continue gaining a lot more strength against the shitty yen, right? Because the yen itself is doing really bad. It's been getting destroyed. In fact, the yen is, I think it's at yearly lows, like decade lows actually, right? Like it's doing really bad. So I think most pairs or most currencies are going to continue to gain strength against the yen. But look at GBPUSD, right? Not doing much, right? All of these pairs, guys, over the past week, 2 weeks, have pretty much just been going sideways. Now, this could really just be happening, guys, because it's starting to get ready, and that's mainly the USD pairs, right? But a lot of these currencies are going sideways because it's pretty much just accumulating orders, in my opinion, getting ready for the massive move that CPI is probably going to bring, right? Because, again, CPI is the one thing that a lot of people are literally going to be paying attention to, and they're going to be making decisions on how or on what they should be doing next, depending on what CPI comes out for on Friday. Okay, so this is going to be very big. It's something that we have to be aware of. All right, so a lot of these currency pairs, though, for the most part, I still believe the dollar is going to continue gaining strength, right? I'm still a dollar bull. I have been a dollar bull for a while, right? And I believe we're going to continue seeing a lot more upside for the dollar itself, guys. So what does that mean for pairs like EURUSD, AUD/USD, and things like that? Well, I think we could see more downside for euro, right? I want to eventually see EURUSD, guys, come all the way back down and ultimately clear these lows, right? All the way down here and possibly even continue going further, right? Again, think about what we talked about on the last stream, right? Before we got rudely interrupted, right? During times of chaos and fear and uncertainty, the dollar is going to benefit from that. Your US dollar is going to gain strength during times of all this uncertainty and chaos, which is what we've been seeing in the world. If the dollar is gaining strength and it's the second currency in this pair, then that is going to cause this pair to lose value. The euro will get weaker against the US dollar because the dollar has been daddy dollar for some time, and I don't see no type of evidence telling us otherwise. I really don't, right? So I believe we're still going to see a very strong dollar. The technicals are still showing that. The fundamentals and the sentiment behind it is definitely still showing that. So I definitely want to continue aligning myself with opportunities to go short. Now, where is the next opportunity for us to possibly get involved in for the euro itself? Well, we did actually just come up, guys, and retest a pretty interesting level here, right? Like this level right now that we're pretty much retesting, that we actually just retested earlier, that would have been a really good area to really look for a short from. Now, for me, I actually have an entry up here at this level, all right, which again, I actually spoke about. I didn't speak about directly this level, but on my session that I did on Sunday, right? Or not my session, but the video that I dropped on Sunday, I gave you guys my weekly outlook, right? Which is pretty much expecting the euro to overall continue dropping. So when price ended up pulling back on us, right, or at least pulled back right here, I ended up grabbing an entry right back up here, retesting previous levels of structure, right? So I already have an entry up here. I'm actually kind of mad that this entry was formed right at pretty much, you know, the end of the day, 5 p.m. Eastern, which is rollover day, right? Which is pretty much when the market ends up closing and reopening in a matter of seconds, right? And the spread gets absolutely insane. So I wasn't really able to get an entry, right? Unfortunately, but it is what it is, right? But what I can look for now is, again, I'm still going to be playing off of levels of structure, right? So now we have this smaller level of structure right here that price literally just retested, right? So this is what I'll be looking for going into tonight. Right, if price can give us a push back up into there, then that can be an opportunity to go short, stop loss above the highs. Right, that's what I'll be looking for. All right, if that happens, that'll be cool. Now, again, just keep in mind, guys, right, this week is going to be a very, very choppy week all the way leading up into Friday. Right, I'm honestly not expecting too much volatility because a lot of the big boys are probably playing the sidelines. Right, when we have data like CPI, and I keep on bringing up CPI because it's so important, but when we have data like that, right, which is really a piece of data, guys, that can really be more of a catalytic move, a lot of the big boys are usually sitting on the sidelines because most of the time they're already in positions, right? Most of the time, a lot of the big institutions, a lot of the smart money, they're already usually in positions for that actual release, okay? But I know some of them, and a lot of them are also still waiting for that data to get released, especially like CPI, right? Because nobody really knows what that data is going to come out as. Nobody, right? So especially data like CPI, if a lot of the big boys, the smart money, they're probably really just sitting on the sidelines to see how that data does get released, so then they can go ahead and also make a decision. So I would not be surprised if these markets, guys, just continue to actually range bound. But ultimately, I definitely want to see more downside overall for the euro. Okay, so whether the market decides to collapse from this level, which again is possible, I don't think is going to happen ultimately. I could be wrong, right? And if it does, I'm already in a position, so it really doesn't matter to me. But I wouldn't be surprised, guys, if we just see the market itself, right, just continue to really, you know, stay range bound, right? Like I would not be surprised all the way up into Friday, and then we get CPI or inflation numbers coming out higher, and then from that point we could really see this thing absolutely start to tank. But ultimately, I want to see more downside, guys, for the euro, for the pound, for the Australian dollar. I'm very much bearish all of these currency pairs, right, that end in USD, right? So that's what I really want to see. I want to see more downside for a lot of these currencies, but ultimately we really don't know what price is going to do leading up into Friday. So again, we could see price really just continue to fall off down into this range, the bottom of the range. That's very possible, but then I wouldn't be surprised if we see it bounce back up. Now, one thing that I'm also keeping in mind, guys, for euro itself, I don't think we're going to come all the way back up to these highs right up here at around 1.075. I mean, it is possible. The market's going to do what it wants to do at the end of the day, right? But if for whatever reason, right, now we're really thinking about from a smart money concept type of perspective, right? Because when and again, this is probably not what most of you guys heard before, right? I actually said it last week, so if you guys were on my stream last week, then you guys heard it. But when I think smart money, right, when I think smart money concepts, yeah, I think about technicals because that's what most people try to correlate smart money and understanding smart money with technical analysis or a form of technical analysis. But when I think smart money concepts, right, or when I think about smart money, I think about them and understanding or correlating them to fundamentals and sentiment. Because smart money, guys, which again, when we're talking about smart, we're really just talking about the biggest institutions, the biggest banks in the world, right? The market makers, the one that actually move price. When I'm thinking about smart money and these market makers and these big institutions and the banks and the central banks, they're making decisions based off data, right? And when I say data, I'm not talking about data on the charts. Like, yes, sometimes it does, because obviously things like liquidity, imbalances, order blocks, all that stuff is true, right? And you can really play those things. But when I think smart money, I'm thinking about how they're correlating the data from fundamental standpoint, and then I'm using that to try to create a sentiment on how like they will create sentiment, and then from that perspective, I correlate it to the charts. Right, so when I think smart money, I think about it from a fundamental perspective first, which is going to influence sentiment, which is then going to lead into technicals. That's sauce right there, guys. Make sure to write that down, right? Because that's something that you're not going to hear nowhere else, right? Because nowadays, when you start typing smart money concepts or smart money here on YouTube, right, you're only going to start to learn about certain patterns, and you're going to hear people talk about liquidity pools and all that stuff, right? And, you know, discounted and premium levels, which I teach all that stuff as well. But you really need to start thinking about it from a fundamental standpoint, right? Write this down. Smart money focuses on the fundamentals first, which is going to create their sentiment, which is then going to be correlated into technicals so that they know when they want to go ahead and start creating levels of supply and demand, right? Because smart money doesn't focus on support and resistance, right? They're creating that. Smart money doesn't focus truly on supply and demand. They're creating that supply and demand because they have so much. What they're focused on is the data from a fundamental standpoint, which is going to lead to them understanding their sentiment or how they're going to approach it, which is then going to create support and resistance, which is then us, retail traders, then we can utilize that information to go ahead and get involved. This is saucy. This is saucy. All right, that's the real sauce right there, guys. Let's see. Can you tell when the market is about to go is about to start going sideways? I mean, yeah, you can see it, right? Like usually it's very easy to see, right? Like we just start going sideways, right? We get stuck in between the range. That's usually what happens. Let's see. I haven't looked at fundamentals in over a year and been fine. I mean, it is possible, right? It is possible. Like I went 3 years, right? Like I went 2 years with no results, right? This is my journey. Again, I'm very transparent. My first 2 years was no results at all, right? And then after that, I was able to really learn technicals. I was able to find out a strategy, and ultimately I was able to really get better at managing my emotions, controlling my discipline, you know, really just following my rules to the T. So yeah, I was also profitable, right? Like I went full time, guys, with really no understanding of fundamentals, right? Like I knew the basics, right? Like I understood the basics, right? But yeah, I went full time trading without any type of understanding, right? Like I made my first 6-figure year trading, right? I had my first 6-figure year back in 2018 trading, and that was really mainly just technicals. But I also had a lot of periods where I was just so confused and I couldn't read nothing. The technicals wasn't working. The strategy seemed like it was flawed. Right? The thing that helped me out was that I was super disciplined and I was super strict and I was not going against my rules for nothing. There's nothing or nobody that can tell me to go against my rules, right? So if you only focus on technicals, then your discipline has to go through the roof. Your ability to really follow your plan has to go through the roof. And most people just don't do that. Okay? But my trading has also just increased tenfold when I did start to implement fundamental analysis. When I did start to understand sentiment, right? Mainly sentiment, right? Sentiment is the big one, right? That's the one that most people don't talk about, is really understanding how sentiment is going to really lead to long-term direction in this market, right? So it is important. Let's see. I'll take a look. I'll take a peek at Forex Factory for high impact news. But that's it. Jordan. I promise you, Jordan. And remember me saying this. I promise you, if you really get into fundamentals more and you understand sentiment, it's gonna take your trading to a completely new level. Like I guarantee it. There's no doubt in my mind about it. Right? Because if you're confident with just technicals right now, watch how more confident you are when you're able to align your technicals with a fundamental bias and a sentimental bias. That's really where smart money's at. Right? The banks aren't making decisions off of trend lines. Right? They're not. Right? The banks aren't making decisions based off of just, you know, basic support and resistance, or even just off of supply and demand. Right? Because the banks, they're creating supply and demand. They're creating those key levels. They're focused on the data. Right? They're focusing on the strength and weakness of an economy. That's what they're focused on. That's what causes them to create decisions. Right? So I promise you, it'll take you up to the next level. Let's see. So how important is technicals is important, right? I don't want to downplay technicals, right? Because it is important, right? Because technicals allows you to identify, you know, areas of interest right? Because like I said, the smart money, they're creating these levels of structure, right? They're creating these technical patterns that we look for, right? They create these things, right? They create these levels of support and resistance, right? Smart money is creating these areas of supply and demand. And then our job as retail traders is to try to play off of these technical patterns that are being created. But if you can get in way before the patterns being created, because now you're thinking like the institutions, now you understand sentiment of the institutions, see, that's a completely game changer. That's a game changer, right? That's what's really taking things up a whole nother level. So it is important, right? And especially with trading, right? Because trading is very technical, right? Where you have to understand where to enter, where to exit, and all that good stuff, right? So technicals helps us identify when for us to get into a trade. Technical helps us identify where our stop loss needs to be placed, our entries need to be at, our targets. So technicals is all important. But again, you really need to just focus on, or I'm not going to say just focus on, but really understand that fundamental and sentiment is what really is what the big boys are making a decision off of. Right, so let's see, you only trade Asian session? No. Right, I actually trade New York session, right? That's my main thing. Right, that's what I trade, right? I trade New York session live. Or not live actually, but I trade New York session. That's my thing. Let's see. Teach, thank you for sliding this game and raising families and generations out of poverty. Oh, of course. Right, that's what it's all about. Let's see, it's crazy because I'm comfortable making good money. That works for me. It's like I don't want to change nothing. Whatever works for you, Jordan, works, man. I'm not here trying to, get you away from doing what you do. Right? Do what works for you at the end of the day. What's going on, Pat the God? I see you. What's going on, dog? Appreciate you in the chats. Let's see, I don't know how I trade, but I trade price action, clean charts, reading candlesticks. Yeah, that's exactly how I trade as well. That's exactly how I trade. Right? From a technical perspective, yeah. I trade naked charts. At times I have my 50-period moving average on there. But then I trade pockets of liquidity. I trade imbalances. I trade order blocks. I trade, premium and discount of levels. Like I trade all that real smart money concept type of things, right? That is being taught. But my main thing that I really focus on is really understanding, again, fundamentals and sentimentals before I even get into any of the technicals. But yo, do whatever works for you at the end of the day, right? If it works, then shit, don't change it. All right? If it works, don't change it. All right? I hope you make a quadrillion dollars, with the way you're trading. I truly do. Right, so this is where I'm at, guys. Again, I really want to see eventually price to really just continue going lower, right? I'm a big fan of seeing EURUSD collapsing, continuing to drop, right? I think that we're definitely going to see a lot more downside, especially from a fundamental standpoint. The dollar, in my opinion, is going to continue to gain value. So ultimately, we're really going to see price eventually break out of this range and then go ahead and continue going to the downside, right? And that's pretty much the same, guys, for, again, AUD-USD, GBPUSD, and so on. The difference between AUD-USD is, we could break the range down here at the bottom and continue going lower. Or there's also a chance for price to actually spike up higher, right? Go ahead and capture some liquidity. Go ahead and really retest back up to structure just because, again, we did have fresh data, right? Understand that data really is very, very important, right? Again, interest rates did just go up for the Australian dollar earlier today. So that might, again, is possibility. That might actually cause some strength in the Australian dollar leading up into CPI at the end of the week. So I would not be surprised if we actually did see an increase in the Australian dollar, at least for now, for the short term. But ultimately, I still am expecting a lot more sell side, a lot more selling pressure, guys, coming up for the Australian dollar as well, right? It's just a matter of, again, how strong can the currency gain based off the data that was just released. Remember what I always say, right? Interest rates going up is going to benefit the currency. That's literally what it is, right? Interest rates going up is going to cause the currency to gain strength. That's just how it is, right? Because when interest rates are going higher, the cost of everything, the cost of actually borrowing money goes up as well. When interest rates go higher, it causes a lot of people to actually hold on to the currency more than anything, right? And it's also causing certain players to actually get out of the equity markets, out of the asset market, and go ahead and convert it back into the actual currency. Supply and demand states when the actual, right, when the need or when the want for the actual supply, when the supply starts to actually decrease in value, but the actual demand stays the same, the value goes higher, right? Which is what we're going to see, right? As interest rates go high, the supply is going to decrease now because people are going to be sitting on cash, but the demand is going to be the same, so it's going to cause an increase, right? So again, for AUD USD, like I said, right, we could see a spike up to 0.735 before we sell off, or whenever we do break out of this range, we could really just see, you know, a continuation to the downside like that. Something very simple, right? And it's going to be the same for GBP USD as well, right? Really no different, right? A lot of these dollar correlated pairs, guys, they do move very similarly, right? So even GBP USD, again, we're stuck in this range, right? Very similar. You know, depending on what happens at the end of the week, I'm still going to be expecting a lot more downside. Now let's go ahead and take a look at GJ, all right? Because GJ has been absolutely on fire. Now, again, I told you guys literally last week and this week, guys, exactly what my thoughts were for GJ. And I told you guys that I was expecting a lot more upside for pound yen. You know, in fact, I told you guys that I want to see pound yen really actually come all the way up, right? All the way up into this range, right? I'm not surprised. I would not be surprised, guys, if we see the pound yen come all the way up to the 175, 176 level, right? That's really going to be my long-term targets right now for the pound yen. And again, this is something that we spoke about, guys, on last week's streams, right? Last week's stream, we spoke about this, right? Where I wanted to see a lot more upside to come into play, right? And we've been seeing exactly just that, right? Where we've been having the pound just absolutely on fire. Now, a big reason, guys, why a lot of these yen pairs are on fire, right? Whether it's USD/JPY, which is on fire, absolutely destroying the yen. Look at this thing, right? Non-stop, just continuing to go higher, right? Pound yen, absolutely on fire, and we're gonna continue seeing more upside for the pound yen as well, right? A big reason for that is because, again, it's not mainly just technicals, right? You have to understand interest rate differentials, right? Like let's really look at this, guys, right? What's the interest rate for the pound right now? All right, let me actually bring this up, right? Let me actually get this number real quick. What's the interest rate for the Great Britain pound? Let me actually do my research real quick. Let's see. GBP interest rate. All right, so the pound interest rate right now is at 1%. Okay, the pound interest rate is at 1%. GBP interest rate 1%. Okay, now what is the interest rate for the Japanese yen? Right, I believe they're still negative. Yeah, they're still negative. Right, so pound interest rate is at 1.00%. Right, the JPY interest rate is at negative 0.10%. Right now, if you had to choose between going ahead and investing into a specific currency, right now, again, when you think about interest rates, think about it in terms of you actually making money from, right? The Japanese yen is still negative. That's why they've been getting destroyed, right? Because why would an investor decide to invest into the Japanese yen that's giving you a return of negative 10% compared to the pound that's giving you a return of 1%? It doesn't make sense, right? And that's the same thing for the USD/JPY, right? The US dollar's at what? A dollar interest rate of what? Let me see. Yeah, it's at $1. It's at 1.00 as well. Right? So when we look at pairs like the Japanese or anything against the Japanese yen, we have to think about the interest rate that's correlated with each one. Right? The Japanese yen is getting destroyed because they're still at negative rates, which doesn't make it attractive for people to actually invest into that currency. Right? Nobody wants it. Right? The demand for the Japanese yen is not as high as other ones because the return is not that good. Right? So yeah, it makes so much sense to continue buying the pound yen because people will be more interested in buying the pound against the yen. I hope this makes sense, family. Drop some threes if this is making sense. All right, we got the man, the myth, the legend, my brother Tyree in the building. Shout out to you, my brother. I appreciate you. What's going on, dog? Good to see you in the chats. Let's see. Joe Bowman, what is CPI, right? CPI is a reading that occurs, right, that measures inflation, right? The Consumer Price Index, it measures inflation, right? Inflation measures the change in the price of goods, right? We've been seeing gas pretty much go through the roof. We've been seeing the price of everything go through the roof. Cars, used cars, housings, right? Food prices, everything is going up, right? That's inflation. That's a cause of inflation. All right, if you're getting some value so far, guys, go ahead and like this video as well, right? I'm kind of upset that we had a little disruption, right? Because we had a lot of people on the last stream. Right, so yeah, I'm still bullish this, right? I'm still extremely bullish pound yen. Right, still extremely bullish. Right, the question that I got here for the pound yen though, right, is again, we have been seeing a lot of strength, right? A lot of momentum, and yeah, we could absolutely continue to go higher. I expect it to go higher. Right, but once we actually come back up and run these highs, guys, right, we have to understand that there's gonna be a lot of profit taking, right? There's gonna be a lot of people probably taking some profit off the table here for the pound yen, right? So what I think is going to happen, and I could be wrong, but I don't think I'm going to be. All right, I think we're definitely going to see probably price come up and run these highs. All right, I could see that happening, right, for sure. But then immediately after, I would not be surprised if we actually see a pull back down before we actually go ahead and continue running higher. Right? I would not be surprised, right? And a big reason why I think that is actually going to happen, or why it could happen, is because again, we already have been on fire for the pound, right? We're talking about it's been going up for the past almost 2 weeks, 3 weeks in a row, right? There's going to eventually be a cooling off period, right? And I believe that cooling off period is going to come if we actually end up going ahead and breaking this supply zone up here, right? Shout out to J Speed in the building. Right, our newest subscriber in the house, family. Go ahead and drop some welcomes in the chat for Jay Speeder in the building. Right, welcome to the family. Appreciate you. Right, but again, if we're able to come up to this supply zone, and if we actually break this supply zone, right, I believe, and I could be wrong, right, but I believe that's going to be a period of profit taking where we could see price come right back down. But then I believe we're going to come down to around 163 to go right back up. Right, I'm still bullish. Right, I'm still bullish for sure. But it's just understanding again that the market itself is going to have a period of profit taking. And I think if we do end up clearing these highs, we're probably going to start to see that period of profit taking push us back down before we continue higher. You a scalper or a swing trader? Right, I'm more of a day trader / swing trader. Right, but I'll scalp if I need. There's the thing about me, right? I consider myself a day trader and a swing trader, but I'm going to take what the market gives me. Right? I'm going to take what the market gives me. You know what I'm saying? If the market is only giving me 15 pips at a certain period in time and I'm just not liking what it's showing, I'm taking that. Right? But mainly I do focus on more day trade and swing trade opportunities. Let's see. Know the Gang President accounted for. Shout out to you, Brother Joseph. I appreciate you. Right, let's see. There is a hammer candle on a 1 hour chart. Let's see what we're looking at. All right, let's see what we're looking at, right? Pound yen. So you're looking at these. You talking about pound yen, Brother Joe? Is that what we talk about? Let's see. Does partials mess with your R to R? Yes, it does. And depending on when you decide to take partials. It really depends on when. Right, but yeah, look at that pound yen as of right now, and this is one thing that I want you guys to really understand as well. Okay, candlestick patterns, guys, are an important piece of technical analysis. Right, candlestick patterns are an important piece of price action. Right, we understand that, but you also have to understand, guys, that candlestick patterns are also very easily manipulated. Okay, because not just we, but like, you got to think about it. A lot of newer traders make decisions on candlesticks, right? And they don't even really care about where the candlesticks are even being placed, right? So yeah, candlesticks are very important price action, but they're also easily manipulated if you're not taking them at the correct areas. So for me, I don't care about what a candlestick is doing. I don't care if I see an engulfing, a shooting star, a hammer, a Maribozu. I don't care about none of that unless it's happening near a level of supply and demand or a level of major structure. Okay? I hope this makes sense. Okay? It has to occur near a major level of structure or a major area of supply and demand. If I'm seeing any of these candlesticks and it's not near a major level, I don't care for it, because more times than not, you're going to go ahead and get trapped in the markets and get liquidated. Okay, there are such things, guys, as wick fills, right? Where we see a doji, right? This to answer the question, right? So how much faith do you have in a doji? All right, you can see a doji show up anywhere in the charts. That doesn't mean the market's automatically going to reverse, right? I think a lot of people get confused what an indecision candle truly is, right? Indecision candle doesn't mean it's a reversal. That just means at that period in time, the buyers and the sellers are very indecisive on who's actually winning that battle. That's all an indecision candle is. And a doji is really only an indecision candle unless it actually happens at a major level of structure. Right, so make sure if you are taking these trades, guys, right, if you are going to be taking off of candlesticks, make sure that you're actually understanding where you're at in the charts and make sure that you're actually trading off of major key levels. That's the sauce right there. Right, so for GJ, yeah, I think we're going to see possibly more upside. Right, I think we'll see more upside. Right, it's very, very hard for me to try to look for buys, though, going against all of this. But I also get it if you try to, right? Because this thing is very, very bullish. If I was looking for some buys for GJ, and again, this is just me personally, right? If I'm looking for some type of buys for GJ, like say going into tonight, right? I'm going to be looking for some buys somewhere down into these levels over here. At around the 166 level. Right, possibly go ahead and create and clear this little small area of demand that we have here. But right below we do have a nice little imbalance, right? That probably will want to get filled. Clean traffic right up in here, right? So somewhere maybe right around the 166, 100 level is maybe where I would want to go ahead and get involved to see if we just continue, right? Because this thing has just been going, right? Like nonstop, it has just been continuing to make its way higher. Non-stop. Now, once we get up into that supply zone, which again, we're not that far from the supply zone, that's where we really got to just analyze what price truly wants to do next. All right. So that's a very interesting trade, though. Again, very hard to act. It's not that very hard, guys, but just understand. Wait for the pullback and then try to get an entry on the pullback. Right now, I want to take a look at these indices real quick before we go ahead and really wrap this thing up. Where I want to take a look at the indice market really, really quickly, right, and see what we actually go ahead and what we can actually go ahead and find, right? Because just like everything else, guys, it's been pretty much rain bound, right? Super, super choppy. Look at this, right? Extremely, extremely choppy over here. Pretty much just going sideways, right? Now, again, very similar, right? It's probably just going sideways and very range bound simply because, again, it's preparing itself for CPI on Friday. But what I think, guys, is that we're definitely going to see this probably collapse, right? I'm expecting a lot more downside for these indices. All right, I'm expecting a lot more downsides, guys, for these indice markets, right? SPX 500, NAS 100, US 30. I believe we're going to continue selling off, right? Even if for whatever reason we get a spike back up for whatever reason, I'm only going to be preparing myself to take a sell opportunity on that even more. Especially on a low volume push higher, I'm definitely going to be selling the hell off of that. Right, so for SPX 500, yeah, I'm expecting more downside. In fact, like anywhere around these areas back up at these highs is not a bad opportunity. Right, because I do think we're going to eventually want to come down and truly go ahead and clear these lows. And then eventually go ahead and just continue rolling over to the downside. I definitely see that occurring for sure. Right? So it's just a matter of being patient and now just waiting. Again, this one thing that we have to understand, family, right? Sometimes the best trade that you take is the best trade for you to take is the one that you don't actually end up taking. Right? Sometimes it just makes sense for you to just wait out, especially if you only focus on a few pairs. Just wait to see exactly what the market truly wants to do. Or at least if you have a specific bias that you're actually trading, right, then wait for the market to get either at a supply zone or a demand zone and then take that trade from that area. Let's see, what time frame are you analyzing from, right? So I analyze from every single time, from the daily, the 4 hours, usually the ones that I focus on the most to get the overall bigger picture. And then I'll analyze the 1 hour, the 15 minute, the 5 minute to get my entries. What do you feel has been the biggest mistake even professional traders make? All right, that's a very good question, right? Very, very good question. All right, so what's a big mistake that professional traders make? I think I'll speak for myself, right? Because I can't speak for anybody else. But a big mistake that I constantly make, or I'm not going to say constantly, right? But a big mistake that I sometimes make is doing over-analyzing the markets, right? Where I over-analyze it too much. Right? Because there's times where we do too much analysis on the chart and it just confuses the hell out of you. Right? So that's something that I used to struggle with tremendously. Right? Was over-analyzing. Right? Like I'll analyze something. An hour later, I'll try to reanalyze it. An hour later, I'll try to reanalyze it. Instead of just sticking with the initial analysis that you already created. Right? Because when you reanalyze things, sometimes you start to look for reasons why it shouldn't work. Right? And that's a big mistake that a lot of traders actually do, right? Where we analyze something, we have a really, really good setup, but then we try to look for reasons why it can't work, right? Or why it shouldn't work. And then we just start going through, analysis paralysis, right? And then we really start dealing with analysis paralysis and we're like, man, what the heck are we looking at? Like, what is going on? Right? And then we go from looking at a setup on why it should work, and then we start focusing on the things on why it shouldn't work, and then we just screw ourselves up, and then we're in our feelings and our emotions, and at that point, you're not going to win. Right, guys? There's a big difference that we have to understand as well, right? You can lose a trade well before you even place that trade. Let me say that one more time, right? You can lose a trade way before you even place that trade. Now, who knows the answer why is that who knows the answer why that happens? Right? How can you lose a trade before you even place a trade? Who knows the answer to that? Let's see, I changed a little. What about gold here? Yeah, I got you, John. I'll check that in a second. I got you. I'll check gold after this. I haven't traded currencies in over a year, so I used to be an IML, and I saw that you were a teacher and just decided to follow your YouTube channel. I like the way you break it down up here. First time watching. What's going on, Kendrail? Appreciate you. Welcome to the family. All right, family, go ahead and drop some welcomes in the chat if you love seeing new members like myself join the familia. Absolutely astonishing. All right, welcome to the family. Appreciate you. Let's see, mental, psychological. Yeah. Right, the reason why, and again, the question that I ask guys, right, is how can you lose a trade well before you even take the trade? Is because you're already in your feelings before you even jumped in the trade. Right, and again, a lot of traders go through that. Right, where we're already in our feelings and we're nervous and we're scared well before we even take the trade. Right, and if you're going through that state of mind, guys, or if you're going through that period where before you even take the trade and you're already in your feelings, then you already lost. Right, if you start pacing around your house because you're contemplating on taking the trade, you already lost. Right, trading you need to be very robotic on, right? Robots don't have emotions, right? Robots just do what is told and that's it. You need to be very robotic as well. Right, where you can't allow your emotions to get the best of you. And this is where, again, really just being confident in your strategy comes into play. Because when you're confident in the strategy that you're trading, you're not going to second guess it, right? The moment that you see the setup, you're taking that no matter what. No emotions, no feelings attached or nothing, right? You're just going to take that. Right, but again, as newer traders, I get it. I went through that stage for years. Right, where I would constantly overthink things, right? Where I would constantly focus on me taking a loss more so than focus on me following my rules. Right? In the moment that I understood the difference between a good losing trade and a bad losing trade too, that really changed the game for me. Right? So yes, guys, it's very possible for you to lose a trade before you even place a trade. Right? It's very possible for you to lose a trade even if you don't even end up trading that trade. Right? Because once you're in your feelings and once you're already going through that mental battle, and now you're scared, you're fearful, you're contemplating this, you're already lost. You might want to just scratch that setup and go ahead and try to find something else that's a little bit more clear for you. Let's see. Yep, so let's go ahead and take a quick look at gold. Right, I know I spoke about gold earlier, but let's take a look at it. Now, gold is just doing like everything else, guys. A lot of these pairs, especially a lot of these USD pairs, they're just going sideways, right? They're very, very much range-bound, going sideways, really not giving us too much direction at all. Right, and again, it could be because of, obviously, I keep on bringing it up, but it's such a big deal, right? CPI is such a very big deal right now. Right, but what I think I'm going to be looking for going into this week is I want to see gold start to fly, right? Like, I'm bullish gold, guys. Like, I only want to look for buys on gold itself, right? So what I'm going to be looking for is opportunities to actually buy, right? If we're looking at gold right now, what are we seeing, right? We're seeing this lower high, little pause, higher low, higher high, right? But then we see market structure again pretty much show like a little shift in momentum. So back down to this demand zone could give us an opportunity to go higher. Right now, another thing we do have to keep our mind is like, yeah, we do have this demand zone right here where price has acted as multiple times as support and resistance, but we also do have a little bit of clear traffic right below it. So two areas I'm gonna be looking for, guys, for opportunities for gold is we're either gonna bounce off of this level right here, right, 1832 or 1820. That's it. That's simple, right? These are gonna be two areas that we really go ahead and look for opportunities from. Right, 1832 or down to around this 1820 level. Let's see. Wall Street Insider exposes clowns, cons, and frauds. This guy's another YouTube clown. He has no idea what he's talking about. I appreciate that. Thank you. It means a lot to me. Thank you. Hopefully you stay on and learn a couple of things. Let's see. High GBPUSD. Yeah, let's go take a look at pound dollar. Right, again, it's doing very similar price action. Right, it's doing very similar price action, just going sideways. Right, but overall, I'm expecting the pound to really go ahead and continue dropping over time. Right, again, the markets, guys, right now are just, I keep on saying for a lot of things, right, they're very, very range bound. Right, they're just going sideways. Right, pretty much just waiting for CPI. Right, but for the most part, we're just going sideways. Right, really not doing too much. But ultimately, I want to see price really go ahead and continue to actually sell off. Right, I think we're really going to see a lot more selling pressure coming in for a lot of these dollar correlated pairs. The daily dollar is still daddy dollar. Right, when I say daddy dollar, I'm talking about daddy dollar because the dollar itself has just been massively, massively strong. Right, like the dollar's strength has been so strong, guys, that it's been bringing everything down. Right, including gold. Right, like it's been more of a safe haven even than gold. Right, the dollar has been absolutely on fire, and we've been calling the dollar being on fire for years now. Right, literally for the past year and a half, we've been calling it, and I don't see it slowing down. Right, I believe we're going to continue seeing a lot of dollar strength, especially because of inflation, especially because of all the fear in the world. You know, especially because the U.S. is about to be in a recession. We'll find out officially if we're going to be in a recession July 1st. Right, so we have a lot of momentum, a lot of potential momentum for the dollar, you know, to really continue increasing. And that's why I really want to expect the pound itself to continue, you know, losing value over time. So I will be looking for more selling opportunities, guys, for the pound more than anything. All right, that's literally just my opinion, right? I think we're going to see a lot more selling pressure more than anything coming up, right? So maybe something like this is what you could look at going into tonight, right? I just highlighted another key level, right? So if we actually end up closing below this 1.255 level, then we could see a retest and then more so of a continuation like that going into tonight. Right, so that's really, really what I'll be interested in for GBPUSD going into tonight. All right, but overall, I'm definitely still expecting a lot more downside. It's just a matter of if we're going to break the range or not. Right, that's something that I really can't tell you. I don't know if we're going to break the range just yet or not. I really don't know. Right, because we could stay range bound and then possibly break out on CPI right on Friday. Or we could break out a little bit earlier. Again, I'm not psychic, right? That's the thing about traders, right? Traders are not psychic, right? We can't just predict the future, right? We can make educated guesses, okay? We can make educated guesses because that's all we really do is we make educated guesses on what we expect the market to do based off of, you know, our understanding of fundamentals, sentiments, and technical analysis. But we're not psychic, right? The market is going to do what it wants to do whenever it wants to do at the end of the day. That's really what it comes down to, right? But yeah, I expect more downside more than anything, family. But, you know, before we even actually go ahead and wrap this up, guys, just like I was mentioning in the last stream, you know, I am hosting a 5-day virtual boot camp. I've been training for the past 7.5 years, guys. I've been able to teach thousands and thousands of people across the entire world, live, in person, at events. And I've also been able to do it virtually via Zoom calls, via actual platforms for the previous academy I used to work for. And now I'm going to be putting all of that 7 years of experience into a 5-day boot camp, right, which we're going to be doing for a few hours a day, each day, right, to go ahead and give back to you guys. So if you're interested in being a part of the boot camp, I already had a bunch of people. I literally just released it today, right? But I had a ton of people that actually messaged me that are interested, a bunch of people that actually already, you know, got set up, that are already waiting for the day, right? I'm not taking a lot of people, right? It is going to be, I'm not going to say too limited, but, you know, I am going to be closing down access to joining very, very soon, probably by the end of the weekend. I don't know, depends, right? So if you're interested in something like that, right, then make sure to go ahead and go in the description of this video. I have a form in there that you can go ahead and fill with a couple questions, right? And then from there, I could send you an email with the information on how to go ahead and secure your spot. Right? Like I said, this is information, guys, that I know for a fact took me from a warehousing job 4 years ago to now me actually been living and trading Forex full time for the past 4.5, 5 years. Right? And I've been able to do it professionally for the past 4.5, 5 years. And I've been able to see results that most people have not been able to see. All right, now not even just that, right? Because I'm not the one to really brag about my accomplishments, but I've had countless amount of students, countless amount of testimonials from people that I've also been able to teach as well. And I know I could do the same exact thing for you. In fact, Wall Street insiders, right? If you're still on this call, I'll give you a free access, right? I'll give you, I actually encourage you, I invite you to come to the actual 5-day boot camp. And if I don't give you no value, then I will actually go ahead and support you, you know, with doing exactly what you just did. All right, so that's for you, Wall Street. I'll give you a free inside look of what I teach so that you know exactly what I bring to the table. Right, so without further ado, family, I appreciate you guys. I love you guys. If you guys just got on for this stream, make sure to go ahead and watch the previous one as well. You know, I had a little interruption in between. All right, but make sure to go ahead and check out both so you can really see what I'm about, see what we were really talking about, and just so you guys could continue to get, you know, have a better approach going into this week. All right, so family, I appreciate y'all. I love you guys. Thank you guys for rocking with me. I'll be back tomorrow, same time, same place. Let's pack it out. Let's get 200 plus on. Let's continue to get better every single day as much as possible. All right, family, I love you guys. I appreciate y'all, and I'll see you guys in the next stream. Let's get it.